Hello everyone, welcome to today's video. In today's video, we'll be talking about Indian plastic pipe industry. This is one of the most happening place. The capacity expansion is taking place by the existing players and there are a lot of new companies that is entering the space. Majority of the market share is with the unorganized players, but the exciting part is the shifting of market share from unorganized players to the organized players. We will talk about this in detail in the later part of the video. We are going to talk about the company called as Prince Pipes and Fittings, which is established in 1987 and one of the fastest growing company in this sector. You can see here some of the product offerings by the Prince. Their products are used in plumbing, sewage and underground pipes, and also they are in the agribusiness. You can see the market share distribution in this sector. There are only 5 to 6 major players in this sector currently, and majority of the market share is held by the unorganized players. The shift of market share will definitely happen because these days consumers prefer to buy products from the organized players, and this is due to the increased brand awareness, and this will definitely help the existing players to increase their sales. They have very good distribution network and the number of distributors are increasing very rapidly. And if you see the net revenue mix, majority of their revenue comes from the plumbing section, followed by agri and the sewage section. They have built their plants strategically so that they can cater the demand across India. They have 260 KT of total installed capacity, out of which 42% of the production happen from the north region, followed by west 35%, and in south they have 23%. In simple terms, they have more number of production plants in the north region. Currently in the east region, they supply the demand through outsourced products. Majority of their products are PVC, followed by CPVC and HDPE. If you see the difference between PVC and CPVC, for the simple understanding, CPVC are more stronger than PVC. They have very good resistance to heat and temperature. Look at their production plants. In total, they have 7 plants of their own. And if you see in Telangana region, they have a plan of expansion. Currently, it is of the capacity of 4 KT and it will be increased to 50 KT by 23. So we can expect a volume increase in the future. Look at their growth in 10 years. It's impressive. They have grown at a CAGR of 16% in last 10 years. And also if you look the volume growth, that is commendable. Company is also spending good amount in branding. If you see from last 2 years, they have spent the most. Recently, they blocked the deal with Lubrizol. So Lubrizol is one of the largest manufacturer of CPVC and they have a very well-known brand called as FlowGuard Plus. So according to the deal, the Prince will market their product FlowGuard Plus under Prince brand. This will help boost volumes of Prince because FlowGuard is well accepted product across India. Now let's look at some of the numbers of this company. If you see from the last 5 years, the EBITDA margin is increasing, net sales is increasing, the ROE is good, everything is good about this company. The stock is not overvalued. If you see the stock PE is almost same as the industry PE, and they have a debt of 0.14, and I think it should not be a problem for them because if you see the interest coverage ratio, it's 24. That means they have a EBITDA of 24 times more than their interest expense they are paying. So debt is not a problem, and also they have a very good inventory turnover ratio, that is 4.97, almost 5 we can say. That means a company is replacing its inventory 5 times in a year. It indicates a very good sales. Even if you see in the recent quarters, the sales numbers have been increased and their operating margin have been good. Let's look at the annual numbers. The numbers are increasing every single year. And the operating profit margin, you can see it was in 2015 it was at 9% and now it is 18%. It's impressive. The net profit is also increasing at a very good rate from 16 crore in 2015 to 222 crores in 2021. Now let's look at the compounded numbers. If you can see, the sales has been grown in a very consistent rate and the profit growth is massive. And also the return on equity is also good. That means company is efficiently generating profit from its shareholders' investment. The ROC is also good and increasing. ROC tells us company's ability to generate profit from all of its capital employed. You can also interpret high ROC as company can reinvest majority of its profit back into the business or on the assets to benefit the shareholders. ROC is one of the reliable profitability ratio for a company because it includes entire capital invested in the business. What happens, companies will borrow money from the banks and invest in their business. If they are not able to generate profit from their investment, then ROC will be decreasing, which tells us company is not managing its capital efficiently because company is putting their money, their capital in the poor assets that could not fetch them the profit. The FII and DIS holdings are good and it is increasing, and it's a good sign. The stock is trading near its 200-day moving average and near the strong support. And the stock is in consolidation from almost a year now, almost 255 days. And since the economy is recovering from the pandemic effect, it's very likely that the stock will hit a new high. One could consider accumulating this stock now and don't buy it once. There are possibility that it could touch its previous support and then bounce back. The stock might give a potential gain of 30 to 32% from the current price level. So how long will it take to reach the target? Nobody can tell us, because in stock market there is no one definition for short term, mid term or long term for that matter. For a person A, the short term may be 1 month, or person B, it could be 3 months, 6 months, or even maybe 1 year. About the stop loss, I usually don't keep stop losses. I put my effort in choosing the stocks, but that doesn't mean that I cannot go wrong, because market is the superior and market is above all of us. So despite your studies, research, analysis, market can prove you wrong at any given day. So my advice is be kind to the market. I closely watch my stocks. I don't worry unless there is any damaging news or some problems with the financials. For the entries, I usually consider double bottom formation at the strong support level, but it's not the case every time. If you want me to explain what are the entries that I follow, let me know in the comment box. I can make a separate video on that. And finally, a word of caution: do your due diligence before investing in any stocks. If you like the content, please hit the like button and subscribe to my channel. Thank you.